Hello, everyone. Welcome to the weekly roundup. Today, we will cover interest rates, tariffs, and market sentiments. Hello, Ben.
Hey, Eva,
You made it.
made it. Technical difficulties today, but that's what we do sometimes.
Yeah. Thank you, everyone, for your patience. We'll dive right in. The Fed maintained its target rate with projections suggesting a gradual decline. Were there any further details to share on outlook for the second half of the year?
Yeah, I mean, I think there's a lot to read into it, and one of the things that biggest probably takeaway for me is that Chair Powell, who's typically pretty confident about his economic inflation outlook, was quite I think a little bit uncertain of what the path looked like ahead. And so we talked, the kind of the headline media at least said it was a hawkish pause, which effectively means that he thinks inflation's accelerating. And so maybe they stay on hold. And even if you go so far to think as maybe some others feel that maybe rates go higher even from here, I think that's a very low probability. But he seemed to lean towards, yes, inflation's causing him some concern, and he is not sure exactly how these tariffs are going to have an impact on the economy. And so a pretty uncertain view look ahead was what came out of the meeting. We certainly weren't expecting any cuts in this meeting coming into it because of the low probability, but it was more of the I'm not sure what happens from here was the tone of his press conference afterwards.
Speaking on tariffs, I do know that Canada had introduced the one Canadian economy
Mm.
to reduce internal trade barriers. I know the bill hasn't passed, but if it does, how does this influence, tariff tensions and discussions with the US?
So certainly, I think to answer your first question, I think it's a real positive for the Canadian economy. What is the metrics and dollar value that's going to have an impact on? I'd say not much this year. Medium term, certainly going to be a real good thing to take down any of the negative impacts from shipping internally. So that's a real positive for Canada long term. As for our relationship with the United States, look, it's fractured. I know that Carney and Trump had a side meeting at the G7, or at least that's what they said, around Carney deemed it as around trade and security. So I think that has a little bit to do with the fact that in one of the meetings that they had, Trump seemed to indicate that they wouldn't provide military support if there's a problem with Canada. So, I think that Canada and the US need to iron that out. But as for Carney's policies and views and suggestions of what they want to do, I think all generally good. Um, he did commit some more money to, Carney committed more money to Ukraine, about $2 billion of military equipment and additional $2 billion loan for infrastructure rebuild, things like that. So, he continues to go down the path that he said he would. And I think those are all generally positives.
Um, Down to the markets, they still seem positive, despite the geopolitical and economic tensions. How was trading this past week, and what should we be watching?
Yeah, so I think we've hit a bit of a quiet spell just from a market perspective. Obviously, the US is closed today, it's Juneteenth. So we have a pretty quiet session in Canada today. And as we head towards the two holidays for Canada and the US, so 1st of July and the 4th of July, we start to get a little bit of maybe a bit of a lull into the summer trading here. But to your point, with the Israel and Iranian tensions right now, uh, the main headlines seem to think that it's not a big deal. I tend to disagree with that. I think it's quite a big deal. So I think we'll see how that plays a part. But markets have been extremely resilient. Maybe the lower volumes, a little bit lower volatility coming in April has calmed things down. But as for valuations, I think around what you're saying, Eva, it's certainly something that causes concern for us here. And then think about what's to come. The one piece which hasn't kicked in, which we've talked about, was just that liquidity. So we've seen liquidity increase in developed markets, but still China, India, we haven't seen a big influx of additional liquidity, so money flowing in, rate cuts, aggressive. We haven't seen that materially enough yet, so that could drive markets higher. So we're definitely at an uncertain time still.
Okay. Let's see the chart.
Okay. We're up. I just needed to move them around here. And then charts, I stayed within my limits this week, so we
Good
should
for
we should
you.
shouldn't be too long. Shouldn't be too long. As you know, we're recording on Thursday, June 19th, 1:30. Anything that happens after that, we can comment on in our review next week. But this was rates, and a lot of conversations I have is just what's going on with rates. And so we have a couple of meetings ahead. We have the next week, we have the ECB, and this was a huge flip-flop switch. And so I did mention this in one of the dailies this week. So last week we had 100% probability of a rate cut in the ECB. Then we flipped to a 93% chance of a hold. So that'll be worth watching what they say, why they say it, what is it. Generally, it's going to be inflation ticked up, I assume. But it'll be interesting to see what Christine Lagarde says in that meeting. We had the Swiss central bank cut rates to zero today. So that was anticipated, going down from 25 basis points to zero, starting to have some talk about negative rates again in some of the countries there. So that's interesting. Partly why you've seen some of the Swiss stocks do well and some of the European markets do well. So that'll be interesting to watch. So key piece there. And then, of course, the following week will be not the following week, the following month, we'll get Bank of Canada provide an update on what they're doing with rates. And we still think rates come down 3 times this year, which I've mentioned a couple of times. Market consensus is twice, 50 basis points, but we think 75. One of the other key pieces that I've been following, and I think people continue to watch, I mentioned the US 10-year bond, but I think the US dollar is as or maybe more important than what happens to assets from here. And so coming into last year, prior to the election, we had the US dollar kind of weak, and then general outlook view was that the Trump administration would be positive for the US dollar. So we had US dollar rip into the start of the year here. So we had an extension, US dollar higher. And then since then, we've had nothing but US dollar weakness. And so, I listened to PIMCO this week, PIMCO, largest bond manager in the world. We're talking about the direction of markets and rates. And one of the key pieces that I took away that they added is they said they feel that the tariffs are inflationary for the US and US markets and deflationary for the rest of the world. So that's an interesting piece to think about. What could be the impacts of that? What does that mean for asset classes and asset prices? But the US dollar is going to be a very key point to watch as it continues to weaken, even in all this turmoil. So typically when you have turmoil, you have US dollar strength, which is where money flows, but that hasn't been the case so far. So US dollar will be an important piece to watch. This also the one of the dailies, Canadian Banks comparables table. Great always to look at these things. As I mentioned, I think on the call last week, is loan loss provisions continue to go up for the banks. This is kind of a fear metrics tactic. Start to put aside additional reserves in the case you start to see defaults tick up. And so if that happens, they're prepared. If it doesn't happen, those end up being a tailwind for prices as they can reduce their loan loss reserves, and then you see the prices appreciate. But this is a great table just to show the comparable book value versus price, current book value per share, dividends, earnings, and so on and so forth. Great little chart just to take a look at where the bank's valuations are at this point. As always, the opinions expressed in here do not necessarily reflect those of National Bank Financial. If you have any questions, please feel free to reach out to us or your financial advisor, and they can answer any of the questions that you may have at this point. So kept it short and sweet today, Eva. I wanted to hit on a couple of those dailies because I've had a few questions about them this week.
Yeah, good. So what's on the agenda for next week?
Yeah, so we'll see. We get into starting to get the last couple of weeks here of June. It's been a quieter month in the markets, but we'll continue to watch the geopolitical risks, and I think those are a key thing to watch. Volatility continues to fall here, though, so I would watch that as well. When we start to get to levels where volatility is falling and prices continue to rise, at some point that could potentially be a trigger for a possible correction ahead. I'll still be watching that US 10-year bond, Canadian 10-year as well, you can watch, but I think the US 10-year bond is an important one to watch. And as we hover around that 4.4 to 4.6 level, I think that piece will continue to be important to watch as higher bond yields in the US certainly put pressure on the US economy further. So lots to cover. And as always, you can watch what President Trump is doing and saying as that will make the markets ebb and flow at this point.
Thank you, Ben. Thank you, everyone, for listening. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeat will be in the caption of this video, as well as in your email box. For our clients, please also reach out to me if you have any questions or if you'd like to book a portfolio review meeting with Ben. Thank you once again for listening, and bye.
Take care, everybody. Thanks.